Ladies and gentlemen, in the ever-evolving landscape of global finance, one truth remains steadfast: uncertainty is the only certainty. As we navigate through economic cycles, geopolitical tensions, and unprecedented fiscal policies, it's imperative to recognize the assets that stand resilient amidst turmoil. Among these, gold emerges not just as a commodity, but as a universal asset, one that transcends borders, currencies, and time. Throughout history, gold has held a unique place as a symbol of wealth, security, and stability. Long before modern banking systems and digital currencies existed, societies recognized the intrinsic value of this precious metal. In times of prosperity, it served as a measure of wealth, a medium of exchange, and a tool for trade across continents. Yet, it is during periods of crisis that gold's significance becomes truly evident. When governments faced collapse, currencies lost their value, or markets plunged into chaos, gold consistently preserved purchasing power in a way few other assets could. People from all walks of life, across different cultures and eras, instinctively turned to gold when uncertainty struck, understanding that it held a reliability beyond paper money or promises. Its physical nature, scarcity, and universal acceptance created a safeguard that could not be easily replicated or devalued. Even as economies evolved, wars were fought, and empires rose and fell, gold remained a constant, a tangible asset that transcended political borders and human error. It has served not just as wealth, but as a psychological anchor in tumultuous times, providing reassurance when all else seemed unstable. By studying history, it becomes clear that the value of gold is not just monetary. It is a reflection of human behavior and a timeless testament to the enduring need for security and certainty. Its resilience offers lessons that remain relevant in today's unpredictable financial landscape. The world's economies move in cycles, expanding and contracting in patterns that have repeated for centuries. During periods of growth, optimism is high, debt levels rise, and markets flourish. Yet, these expansions are inevitably followed by contractions. When debts become burdens, asset prices fall, and uncertainty increases. Today, global debt levels have reached unprecedented highs, with governments, corporations, and individuals relying heavily on borrowed capital to fuel growth. While debt can stimulate economic activity in the short term, it carries the risk of destabilization when repayment becomes challenging or interest rates rise. In such environments, currencies can lose value, inflation can erode savings, and traditional investments may falter. This is where the importance of reliable assets becomes evident. Assets that are not someone else's liability, ones that retain intrinsic value regardless of debt cycles, serve as critical protection. They provide stability when the broader financial system faces stress. Gold, in particular, has historically performed this role, acting as a hedge against inflation, currency devaluation, and economic instability. Its value is not contingent on promises or fiscal policies. It is recognized globally and retains purchasing power even when paper money weakens. Understanding economic cycles and the risks inherent in high debt levels encourages prudence and forward thinking. By positioning oneself with assets that endure beyond the fluctuations of debt-fueled markets, it becomes possible to preserve wealth and navigate economic uncertainty with confidence. In a world of constant uncertainty, the concept of diversification becomes more than just a financial strategy. It is a principle of survival. No single investment, no matter how promising, can consistently perform well under every economic condition. Markets fluctuate, interest rates change, and geopolitical events can alter the financial landscape overnight. By spreading investments across different assets, individuals can reduce exposure to risks that come from relying too heavily on any one source of wealth. Diversification is not about maximizing short-term gains. It is about managing risk, protecting capital, and ensuring stability over time. Among various assets, gold occupies a unique place in a diversified portfolio. Unlike stocks or bonds, it is not a liability of any institution, nor is its value dependent on the performance of a company or government. Its scarcity, tangibility, and universal recognition give it a reliability that few other investments can match. When markets become volatile or currencies lose value, gold often acts as a stabilizer, offsetting losses from other parts of a portfolio. The goal is not to eliminate risk entirely, that is impossible, but to create a balanced approach where one's wealth can endure cycles of uncertainty and change. Incorporating gold and other diverse assets allows individuals to face unpredictable events with greater confidence, knowing that their financial foundation is resilient. This approach promotes not only security, but also the mental clarity necessary to make rational decisions, even in times of crisis. The global economic landscape is constantly evolving, shaped by shifts in political power, technological advancements, and emerging markets. What was once considered stable and predictable can change rapidly as nations rise and fall in influence. Traditional economic hierarchies are being challenged, and new centers of growth are emerging around the world. In this environment, relying solely on conventional financial instruments or local currencies can be risky, as changes in global dynamics often lead to market volatility, currency fluctuations, and unexpected economic pressures. Assets that maintain value regardless of geopolitical shifts become increasingly important. Gold, for example, has historically transcended borders and political systems. Its worth is not tied to the policies of any single country or the stability of a particular government. As economies grow interconnected and the world order shifts, gold continues to serve as a universal measure of wealth, recognized and valued by people everywhere. It offers a sense of stability when other assets may be influenced by political disputes, trade wars, or economic reforms. Understanding the changing world order also requires awareness of long-term trends rather than short-term events. By positioning oneself with assets that remain resilient through these transformations, it becomes possible to safeguard wealth against the uncertainties that arise from global shifts. In an era of constant change, the ability to anticipate, adapt, and protect becomes not just an advantage but a necessity, and assets that endure, like gold, play a crucial role in achieving this resilience. In uncertain times, the ability to navigate financial challenges depends not only on the assets one holds, but also on the mindset one cultivates. Personal responsibility and prudence are critical in making decisions that safeguard wealth and ensure long-term stability. It is easy to be swayed by fear, speculation, or the pressure to follow popular trends, especially when markets fluctuate or crises unfold. However, reacting impulsively often leads to mistakes and missed opportunities. True financial wisdom involves anticipating potential risks, preparing for them, and taking deliberate, informed actions rather than being driven by short-term emotions. Being prudent does not mean avoiding risk altogether. It means understanding the risks you face, planning for them, and taking measures to protect yourself against worst-case scenarios. One important aspect of this prudence is choosing assets that are reliable, tangible, and recognized across time and borders. Gold, as a universally valued asset, provides a sense of security because it is not dependent on someone else's obligation or promises. By incorporating such assets into a balanced strategy, individuals demonstrate foresight and discipline, which are hallmarks of responsible financial behavior. Moreover, personal responsibility extends beyond managing assets. It includes continually educating oneself, reassessing strategies as conditions change, and maintaining the patience to allow prudent decisions to bear fruit. In doing so, individuals cultivate resilience, confidence, and the ability to face uncertainty with clarity, ensuring that their financial well-being is preserved regardless of the turbulence around them. As we stand at the crossroads of economic uncertainty, let us remember that gold is not merely an investment, it's a legacy of wisdom passed down through generations, a legacy that has withstood the test of time. By recognizing its value and incorporating it into our financial strategies, we honor this legacy and ensure our place in the future. Thank you.